Good afternoon. This is Chris Brecher with Brecher Trading, the February 10th Free Friday video show, Disney World, because I spoke at the Money Show Orlando. I've got to do that at 8 in the morning, sort of the graveyard shift today, and it went fine in here. Just to let you know, this was the actual mailer for it. Let me get it in front of you. The Money Show, best ideas for 2018, and there I am, using short-term patterns and indicators to trade on Friday expiration. Now, let me just explain that we had to find a room to trade out of. The problem is we didn't have a wired internet connection, and I was worried of using the wireless in the room. The convention center is outside the hotel, so I figured you get a better hotspot for your phone. So we went and snuck into a convention center that wasn't being used. There was a stage there, and we had some of our subscribers actually were there with their laptops, sat there in there while I broadcast live to our subscribers. And we had the last half hour, we had 20 different people make $1,000. So right in front of my friends, right on a remote computer, we were able to actually find some great bull flags in there. And we'll go into that in a minute. So just to let you know, I was promoting myself and doing a thing on Friday expiration, but I also was promoting Brecher Trading. Brecher Trading is $97 for the premium, and the premium includes the chat. And I'm telling you, I've been doing it 37 years. When the market's like this, you need a live chat. We also have an archive of the chat from that day. I'm actually uploading them right now. I put them in the cloud because it was too slow in Orlando. I'm back in Jupiter, Florida now, and I'm uploading the archive chats right now for today. But to let you know, you get nightly videos where I explain everything going on. Weekend and swing trade videos, I'm working on that for the subscribers now. Morning ideas and charts, I'm telling you, I gotta show you some of the ones I'm pretty impressed with myself. That basically I left on Thursday early at 2 in the afternoon. I did 2 hours in the morning to make up for I couldn't be on the last hour. All the projections I showed on charts that I actually posted before I left, every single one worked. So it was pretty exciting to see that. Forum is pretty exciting. I go in, I show my layouts. People ask me questions. They ask each other questions. It's a very active forum. Learning Center videos, very exciting in here. I like how I got this set up. Let me show you. All my videos, every night you get videos. Learning videos, I have 6. I add one about every other week. Nightly videos, and like I said, every night. Swing trade videos, I'm working on the one for tonight, February 10th. And then also what we have in here is special events. That was pretty exciting this week. Wednesday night, it was Ask Me Anything, and then I have a replay right here. Next one's going to be February 21st, 7 to 7 p.m. Eastern. So that's for anyone that's that doesn't have time during the day to get on the chat. Now they have a way to access me, which is exciting. So let's get in, and I'm going to show you what I was seeing in the market today. Get rid of my Disney thing in here. And just to give you an idea, the big problem with the market now, as opposed to a lot of other years, is that the bond market has refused to rally at all. None. And usually what happens is you get a sell-off, you get a flight to quality of the bonds, and I'm actually going to put up 2 charts so you know exactly what I'm talking about in here. This is the SPX on the left. Now, sometimes the old bond markets don't work, so let's be sure this goes back far enough. It goes back fine. This is what I want to show you. I want to go back to August of 2015. And I want to show you right here and watch, put this on a daily chart, and I want you to see what happened August 2015. We got nailed in the overall market right here, right there. Look at that. If that looks familiar, it sort of does, but just keep that in mind. Now on the right, I'm going to show you August of 2015 of the bond market. What do you notice in there? It started going up. That's usually what happens in a panic. You get exactly this. You get the bond market precipitating a sell-off. When the SPX or the ES starts selling off, the bond market rallies. Then everybody says, oh, there's nowhere else to put your money, and the stock market follows the bond market. Just beautiful. It does this all the time. As you see in here, this is a classic example. You started topping, you had momentum, so you didn't go down, but yeah, you stayed static. Bond market has that leg down in April, and the market stayed up. Then the next leg of the bond market, that was it. And that caused this to crack in the middle of August. This was already starting to rally, but the damage was already done. Look at the slope of this on the left compared to the slope on the right. It worked beautifully. Why am I showing this? Because go now to what's going on. Look at the ES on the left and look at the bond market on the right. That's the scary thing, that the bonds that precipitated the ES, and I know everybody says it was the VIX and this and that. The VIX didn't help, no doubt about it. But the point was that this didn't bounce at all. People got scared. They were massively short the VIX and short puts in the SPX, and they got themselves murdered. Did we bounce on Friday at the 200? We bounced twice at the 200 moving average. That's great. The point is, the biggest reason we bounced is because of the chart I'm going to show you. Go to iCloud. I'm going to iCloud, but you go into the StockTwits sentiment table that I publish every week. Just to let you know, all it is compiling sentiment on StockTwits. I'm the only one on StockTwits that does it out of 2 million people. I'm in shock. So they love it there. It's a good promotion. This is what I want to show you. I just sent this out to subscribers and posted it on social media. Go and check this out in here and notice that the ESs went from 73% bullish on January 15th, slowly went down bullish, but they were still really bullish. The other thing I want you to notice in here is the SPY and all of them collectively. You could probably add them up and do some kind of index that way. You see 86, 86, 71, 80, 64. You don't need to know that the top was in this zone in this area. That's what happened. As you see, no bearishness last week. A lot of bearishness this week. A tremendous amount. That's the good news. The bad news is the individual stocks that are still at 69 to 76% bullish. You would like to see them negative like you see on Netflix here. So very frustrating that and Netflix acted great this week, actually, on Friday. And we'll go into that in a minute. But you'll see there's just a lot of bullishness still. Very unusual. So usually what happens in this, when the bonds have gone down, but we have this much bearish sentiment, you get these vicious short squeezes, which we got on Friday. Now, the thing is, our subscribers, what's been happening is we've been shorting the opening, and I'll show you how. The second that the market crossed the ATR trailing stop of the morning, we were shorting. Now, you might say, but it crossed it back up. But look at the ledge. Then the ledge projected to here. Now, if you're wondering if it's voodoo science, this and that, I want to show you something interesting. A number of us have, some friends of mine have different services, and when this broke, they were like, it's going to here. Well, I had already was telling everybody that. They're like, these services are emailing me, and they're saying the same thing you're saying. I'm like, get rid of the other services, just keep me. But no, it's interesting that all of us agreed on this. And very interesting. The SPX was a little clearer cut. Go put this on a 15-minute chart and you'll see what I'm talking about. We were talking about this zone. When this broke, it went down symmetrically. Now, the next thing you're going to notice on the SPX, back here on Monday when everybody thought it was over, notice the trend line you can draw. Yep, you guessed it. Right under the top, and look what formed under that trend line. A doji. That was just beautiful. But let me just tell you on how you could short there, no doubt about it, 2640. But this is what a lot of people did that shorted and then asked questions later. See those little those little reversal candles? See that reversal candle? They're the exact same price. When you closed under 2617, that was it. And as you see, it blipped down. That was a whoosh on Thursday afternoon, tried to bounce on Friday, and then just got killed. So what's the point of this? Is that these charts work. So what happened on Friday? Let's go into 6 time periods. Now, see these 6 time periods? I posted this on the forum today, so everybody has 6 time periods, just the setup. But what you saw in here is a number of things. Number one, you had the 200-day holding. You see the 200-day. It held. Now, the ES had a double one. Remember, the ES is 24-hour charts, so the ES has had like a double touch of that. The next thing you had in here was positive divergence. That was a warning sign. That doesn't mean to go long. What it means is to alert me to go to a shorter term chart to cover my shorts if it crosses. Notice over here on the left, bottom left, that when you got that tip off on a 5-minute chart, you could see it a mile away. Now, the way I usually do this is after a protracted down move, the first little blip up that gets over the ATR trailing stop creates too much of an overbought condition. Now, another thing I've seen when something gets real overbought, a lot of time that shows a reversal in trend. Just keep that in mind. But that wasn't the point. The first one got overbought. The next sell-off, the one that scared everybody, actually had positive divergence. Then go to this and maximize the sell, and you can see a definitive trend line you could draw right there. So you don't buy the first break because it gets overbought too early. What you do is you buy the second break. That was only good for about 50 points. A lot of people, though, when I'm talking about we made money the last half hour, we were betting on that bull flag working. Now, why did you bet on the bull flag working? And I want to go into that of what I'm talking about. The bull flag started working because, and how did you know to jump on the bull flag? Because let me tell you what we were watching. We were watching this, and we were like, is this overbought in a downtrend? And we're going to roll over and die the last 30 minutes, or are we going to go up? The biggest way I do this, the easiest way, is I go to correlated indexes and stocks. If all of a sudden some of the stocks have already started to break up, well, you get the gist of what we're talking about. So we're going to take the ES on the left, see the 5-minute chart, and right here, you didn't know whether it went up or down. So just keep that in mind in here. That's number one. You didn't know yet. Right here, you weren't sure at all at 3 o'clock. But on the right, like a lot of times, banks lead. Watch what was happening to Citigroup in those 5 minutes. So right here, when you weren't sure on the left if this was going to break up, Citigroup already had broken up. It had already broken that bull flag. That was a big old tip-off, not just Citigroup, but Goldman Sachs. If you look at the time of this went up before this on the left broke. The moral of the story is those kind of patterns were starting to work. Just some of them took longer than others. So we went into McDonald's. If you go on the timing of this, McDonald's hadn't started going up yet. And Citigroup had started going up. We bought the 160 calls at 17 cents. Now, I bought one there and just threw in to sell it for a double to show everybody. One person in here bought 4 of them at 18 cents and sold them at $1.04. I mean, they made, what is that? That's 600% on their money in about 10 minutes. They went to $2 from 17 cents. More of the story, in a volatile market, and this is why I like to trade on expiration. That's why I did a class on expiration. That's why I did a talk on expiration in Orlando. When you have that kind of violent objective, and you see this kind of objective that's really about 3 to 4 points, heck, you go and buy 17-cent options, and it worked beautifully. The other thing that worked was Netflix. Netflix is a rumored takeover stock, and what happened in there? Number one, it started going up before the rest of the market. Look at the low on the ES here at the 130. Look at the low in Netflix at 1230. That's a big old tip-off that if this goes up, this is going to be one of the leaders. The biggest problem I see with traders is this stock goes from 242 to 248, and everybody says, oh, I give up, I missed the move. Well, what we were doing is watching this bull flag. Now you have Citigroup and Goldman Sachs going up. We were buying the 247.5 calls for about 80 cents. They went to $5. So just keep that in mind. We had the most people make money in our group and on the subscribers that I've ever seen. And just keep in mind, we were bearish on the opening. If you were thinking all we did was trade the first half hour, go to GM. See how GM opened up on Friday? Right here. We had people using a 1-minute chart, and they were short in GM right. Let me get the right day here. I'm all excited. I go to the wrong day sometime. Go to Friday. Right there. They were buying the 42 puts at 50 cents. Now, I bought them at 50 cents, and I sold them at $1. I had to go to a luncheon. Look what the stock did. Now, did you get out here? I did. But the point is, and then I had to go to a luncheon where I talked to some college kids. Notice what formed. You see it a mile away. Did it go down from there? You betcha it went down the amount of the previous move. So I actually got back on the chat at noon and said, did everybody short GM? And everybody said yes. When I saw this, I said, are you still short? And everybody said yes. And it went down by that amount. And then they covered when it crossed the ATR trailing stop right here and then saved themselves about $1.50. Great trade in there. You were buying 50-cent puts that went to $1.80. So that was pretty exciting. So what do you do with the market now? Well, a lot of this is for subscribers, but I'll show you what I'm looking at in the market. Number one, the ESs. They should have a bounce because the excess pessimism. As you see, we're still oversold on a weekly. On a daily. We held support, and we had a nice reversal on Friday, so we could have some follow through early in the week. On a weekly, though, we're not oversold. Just keep in mind that all the other blips down, like I've showed you in like 2009, 2008, big old oversold. You look at this. Even 2015 that I showed you got weekly oversold. That's pretty darn scary that we're not close to oversold. So I think after some kind of relief bounce, we might go down to finally test these areas. So I hope everybody's enjoyed this video. Thanks for listening, and I hope you get a chance to sign up for our site. Take care.